The 6-month plan to take full control of your money. Let me say something uncomfortable. If you doubled your income tomorrow, most of your money problems would still exist, because the real issue isn't how much you earn, it's how much you control. I've seen people earning $1,500 a month stressed out. I've seen people earning $15,000 a month stressed out. Same stress, different numbers. Money comes in, money goes out, and somehow there's never enough. So here's what we're going to do. For the next 6 months, you're going to rebuild your financial life from the ground up. One focus per month, one clear objective. No hype, no shortcuts. If you follow this seriously, 6 months from now, your financial life will look completely different. Let's begin. Month 1, face your finances. Most people avoid their money. They check their bank balance quickly. They ignore credit card statements. They avoid thinking about subscriptions. It's like closing your eyes during a scary scene in a movie. But here's the truth. Avoiding money does not fix money. This month has only one job. Track every dollar you spend, every card swipe, every cash payment, every auto debit, every $4 coffee. And no, you cannot wait until the end of the month and estimate. If you spent $27 at a store today, write it down today. Because memory lies, data doesn't. At the end of the month, divide everything into 3 categories: needs, rent, groceries, utilities, insurance, transport, wants, dining out, shopping, upgrades, subscriptions, investments, anything that builds future income or assets. Now comes the shock. You might think you spend $300 on eating out. It could be $600. You might think subscriptions cost $80. It might be $220. This month is not about judging yourself. It's about seeing the truth, because you cannot control what you refuse to measure. Month 2, build a 1-month safety net. Now, take your needs number. Let's say your essential monthly expenses are $2,500. Your mission is simple: save $2,500. That's it? Not 6 months, not 1 year, just 1 month of survival. Why? Because life happens. Job loss, medical bill, car repair, family emergency. If one unexpected event can destroy you financially, that's the real risk. So temporarily reduce wants. Cancel what you don't use. Pause what you don't need. Be intentional. This is not forever. This is strategic. When you finally see 1 full month of expenses sitting safely in your account, something changes. You stop living in fear, and that confidence is priceless. Month 3, eliminate bad debt. Now we deal with the monster. Debt. First, list every debt you have. Credit cards, personal loans, car loans, student loans, everything. Now here's the important part. Not all debt is equal. A student loan at 5 to 7% that increases your income can make sense. A mortgage on a home can build long-term value, but a credit card charging 25 to 35% interest, that's financial quicksand. So here's the strategy. Ignore interest rates for a moment. Start with the smallest balance, clear it completely, then move to the next smallest. This is called the snowball method. Why does it work? Because momentum matters more than math in the beginning. When you go from 5 debts to 4 to 3, you start believing you can win. And belief changes behavior. If you have no debt, expand your emergency fund to 3 months. If your income is unstable, aim for 6. Stability gives you power. Month 4, start investing the right way. Now we grow. Investing does not mean gambling. It does not mean chasing trends. It does not mean day trading. It means steady, boring, consistent growth. Simple framework. If you're 30 years old, roughly 30% in safer assets. If you're 40, roughly 40% safer assets. The remaining percentage goes into equities. Keep it simple. Broad market index funds, low cost, diversified, long term. No stock picking, no guessing, no drama. Now add protection. Health insurance, even if your employer provides coverage. Because jobs change, and life insurance, choose term insurance. High coverage, low premium, no investment attachment. If nothing happens to you and you never use it, that's success. Insurance protects your family from disaster. It's not meant to make you rich. Month 5, increase your income. Here's a powerful truth. There's a limit to cutting expenses. There's no limit to increasing income. Ask yourself, can I negotiate a raise, switch jobs, freelance, consult, teach, build digital products? Even an extra $500 per month changes your math. Because now, expenses are tracked, debt is shrinking, emergency fund exists, extra income becomes fuel, not survival. And sometimes the best investment you can make is in your own skills. New certification, better communication, technical skills, Sales skills. Skills multiply income. Month 6, automate and simplify. Now we remove emotion because discipline fades, motivation fades, systems don't. Set auto pay for bills, set automatic investments right after salary hits, automate savings transfers. Money should move before you touch it. When investing becomes automatic, you stop asking, is this the right time? What if the market falls? Maybe I'll wait. Automation builds wealth quietly, and quietly is how real wealth grows. 6 months from now, you may not be a millionaire, but you will be different. You'll know where every dollar goes, you'll have protection, you'll have savings, you'll have a system, and that's the difference between people who stay stuck and people who build wealth over time. You don't need a lottery win, you don't need crypto luck, you don't need a miracle, you need structure. Start tonight, open your bank app, create the tracker, begin month 1. Your financial life changes the moment you stop avoiding it.